How much home can you afford in Hawaii? Don't guess, let's get it right. Think you can afford a $700,000 home? Maybe, but here's the truth. Income, debt, credit score, and property taxes all play a role. And in Hawaii, those numbers hit a little different. Let's break it down. Hey, I'm Larry Gonzalez, branch leader, loan coach right here in Hawaii. I work with homebuyers every day who are asking the same question. How much house can I actually afford without drowning in the monthly payment? Today we're going to unpack it for you. No fluff, no pressure, just some real talk. Too many folks fall in love with homes before knowing their real number. That leads to stress, missed opportunities, or worse, overbuying. Understanding what you can afford helps you shop smart, negotiate strong, and buy with confidence. In this video, I'll show you what lenders really look at when approving you, the key numbers that shape your buying power, what are Hawaii-specific costs that often get overlooked, and how to find your true monthly comfort zone. Here are the four main factors lenders look at. Income, not just your salary, but bonuses, side hustle income, if documented, and how long you've had it. Debt, credit cards, car loans, student loans. Lenders look at your debt to income ratio, or DTI. Your credit score, the higher it is, the better the terms you qualify for. Remember, your credit score is your financial report card. Down payment, more down payment equals less risk and more options. Pro tip, just because you're pre-approved for a number doesn't mean you should max it out. Hidden costs, especially here in Hawaii. Property taxes in certain areas. Insurance, think flood zones, hurricane coverage. HOE fees, they add up fast in condos. Utilities, especially if you're going solar. Those things all impact your true monthly budget. Here's a general guideline. Try to keep your mortgage payment, including taxes and insurance, at or below 33% of your gross monthly income. Your total debt load, it should be under 45% ideally. No more certainly than 50%. Here's a real life example. If you earn $4,000 a month in a housing allowance, that's roughly your target housing budget. And let's work this backwards. Do you travel? Do you have kids in private school? Do you love eating out or supporting family? Your budget has to work for your real life, not just a spreadsheet. Another question, how long will I be in Hawaii? The best defense against being over your head is time. The longer you own the home, the more your home will appreciate. And since Hawaii is all about appreciation, time equals equity equals risk mitigated. Now you don't have to guess, and you shouldn't. I offer free strategy calls. We will break down your full picture, look at your real numbers, and build a plan around what fits. One of my clients is a young E4 in the Air Force. He qualified to buy a $500,000 condo, but we went over his budget and realized he was more comfortable at a $300,000 range. And we could keep him within his BAH. Working with a great realtor, he purchased the condo for $275,000. It appraised for $308,000, by the way, and has a mortgage payment below his BAH. Oh yeah, the seller paid his closing costs and paid to buy his rate down into the mid-fives. Key takeaway, affordability isn't just about what you can borrow, it's about what feels right month to month. When you know your number, you're in control. Want help finding your number? Reach out. I'll help you look at the full picture, walk you through your options, and help you buy with confidence, not confusion. If this helped, hit like, drop a comment, or share with someone who's thinking about buying. And if you got a question, I'm just a call or a DM away.